Equities are the way to go. That is sealed. But the problem is, number one, identifying these good companies. Number two, buying them at a fair price. Number three, knowing when to stay invested and when to exit. Let me explain this to you. Most of us are aware of the industry that we work in, whether it is media or pharma or construction or banking and finance. You would know the good, bad and ugly companies within your industry, and you can make an intelligent guess on whether to invest in them or not. But you wouldn't know all the industries, right? Finding good industries and identifying good companies within those industries is number one challenge with equity investing. Number two, getting them at good prices. Infosys was and continues to be a well-managed company, right, growing at very good rates. Since the time it became public in 1993, it had a beautiful run-up, and by 1999, the stock was trading at something like 12,800 rupees. Now, at that kind of prices, the estimation was that this company will become even larger than the whole economy of the United States of America by the year 2010. And that's a ridiculous estimation to make, don't you think so? No wonder the stock price crashed from those levels about 85% and took 3 years to recover. Just like what's happening with cryptocurrencies now. So finding a good price even for good companies is challenge number two. Number three, remember brands like Nokia, Kodak, Pan American Airlines, Compaq, right? Very popular, profitable companies of the past, they're all dead now. In their place have come new companies like Amazon, Uber, Tesla, Alibaba. Changes happen, and not all companies are agile enough to adapt to these changes very fast. They fall by the wayside, and so do the investors. So finding good companies at fair prices and knowing when to stay invested and when to get out are all challenges with equity investing. But that doesn't mean you don't invest. You can always outsource that activity. Let me give you an example. Assume you fall sick, right? You wouldn't go back to college, do an MBBS and learn how to diagnose an illness and then take those medicines, come back and treat yourself. No, you wouldn't do that. That's stupid. You'd just go to the nearby doctor, pay him a fair fee and get your medicines. Just like that, you don't have to do it yourself with equity investing. Agree, it's difficult, but you could always outsource that job to professional fund managers. Mutual funds are such fund managers who collect small sums of money from retail investors like that, put them together and manage them. And when they put so much small money together, it becomes thousands of crores. And at that scale, they can afford to employ intelligent industry experts, fundamental and technical analysts, and make a choice on which company to buy, when to buy, what price to buy, and all of that. In 15 years of me selling equities of different forms, I've done IPOs, I've done direct stocks in the markets, hedged funds, portfolio management services, and even complicated structured products. And I've come to this conclusion that mutual funds give the best alpha for my clients, the most optimal returns at the least possible risk and at the least cost. Right? And in India, over the last 15-20 years, mutual funds have clearly outperformed the benchmark index, by a good 6 to 7% year on year. Right? So if you plan to invest in equities, mutual funds are the way to go. Go for it. Having said that, there are thousands of mutual funds out there. Now, within the same category of funds, you would find the difference between the best performing fund and the worst performing fund close to 6 to 7% of compounded annual growth rate. That can translate to about 3 to 4 times wealth over a 20-25 year period. So what you need is a beautifully designed mutual fund portfolio that has exposure to the right sectors and which are not over diversified, optimally managed, and which are agile to changes and can be reviewed properly. This can give you optimal returns for the money that you invest. Now, if you want a portfolio like that built for you, you can reach out to me and I can help.